Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay, the portfolio manager of the Rational Equity Armor Fund. Let's jump right into it. The NASDAQ is sharply lower today. The Dow is actually flat. We have another rotation day today, kind of the reverse of what we've been seeing lately. Tech has been outperforming the old tech after the inflation number came in weaker than expected, and really since interest rates apparently look like they have topped and they've been coming lower. So we're getting a little bit of an opposite rotation today, and this is really critical for people looking at whether or not this is a bear market rally or the end of the bear market rally. So a big difference there. When I see bear market rallies, I see old tech outperforming growth. People still not unwilling to get into those risky assets. When I see the end of the market, bear market, into a bull market, I see growth really outperforming. And we got that for a few days after the CPI data. However, we're pulling back on that rotation today. So still, it's up in the air, waiting to see. I need to see a little more conviction on that rotation trade. The VIX, for its part, that's pulled back down to 22.5. We're back up at 24. We had a little bit of a pop on that Poland-Russia false start rocket scare. So we're back down to 24. Again, this is on the lower end of the range. Maybe we're not going to get down to 20. If we are in a bear market, certainly we could still be coiling. We're getting higher lows. We're getting lower highs. So it certainly looks for a potential move once we break out of this triangle pattern we are here in the VIX. And finally, people are all talking about this Fed pivot, which is happening. Interest rates certainly are lower. Obviously, interest rates are lower because inflation is coming in, but maybe they're also lower because people are expecting the economy to cool off. If you go back historically and you look at previous Fed pivots, it's not actually good for equities, even if interest rates come lower. Usually when the Fed pivots, it's because the economy is slowing down. And when the economy is slowing down, that's actually not good for equities. Of course, they rely on a hot economy to drive their earnings higher. So it's a push and pull. I think the economy slowing down likely will be bad for stocks, even if interest rates do go lower. For Equity Armor Investments, I'm Joe Tigay.